Rob Spivey with Altimetry Research. You have been in the market for a long time. You are the uniform accounting pro. What has been the best payoff investment for you approaching the stock market this way?
My favorite memory of a great trade was actually not in the stock market. It was in the bond market. It was back in 2008 where the hedge fund that I was working at, we were cross-capital, but we were mostly focused on equity. And then when everything went wrong, September of that year, and every market froze, we realized that the bond markets were crazy mispriced. And so we went out and we went looking for bonds that could get us equity-like returns with bond-type protections. And using uniform accounting and really modeling out the cash flows of the business, we found this company. It was wild. Coventry Health doesn't even exist anymore. It's been acquired. But so Coventry, these bonds, they were trading at 60 cents on the dollar. So right, bonds have to basically, if they're not going to go bankrupt, the company's not going to go bankrupt, has to basically pay out at par. I'm at $100. So trading at 60 cents on the dollar, and the coupon on the bonds was like 8.5%. So that meant that already, if we held these bonds, we were making like 15% a year just from the coupon alone. And then what we basically realized, though, which is wild, it had more than 4 or 5 times the cash on its books that it needed to be able to pay off all of its debt alone. So we said, wait, hold on. This company has no risk of going bankrupt. We basically got a way to make 70-80% on our money from buying here and just holding it to par, and we're going to make a 15% coupon every single year. Well, of course, what happened was we jumped in, we bought some. That bond rallied up to like 110, 120 cents on the dollar before it finally got taken out. And so it was just, we basically doubled our money, and then we also made all the coupons on the way. I think all told in a bond, we made 130, 140, 150% return. And it was always a great memory for me of, when you've got those crazy moments in the bond market, if you can jump in and take advantage of it, you can make equity-like returns with bond-like protection. It doesn't happen often, but when you can, it's amazing.
And that was in 2008. That might be the craziest part of that story, too.
Absolutely. Yeah. And so, of course, look, I've had other big winners. We've had big winners. We got Bloom Energy that we recently recommended. That's up, I think since we recommended it last year, it's up 1,100%. But that one, we were taking a chance on a growth story. And that growth story we believed had a rocket ship opportunity to be able to expand its capacity. And we were right. And we think it has a whole lot more room to run. But this one was special to me because it's not often that you get that kind of return in the bond market. And so that's why we love it so much.